So you have a new rule block, and then miners start, mining these legacy rule blocks. They get into this idea of a bounty. So the idea is, let's say a consensus change has just been confirmed in the last block or whatever, and as users, we're all gung-ho, and it's like, yeah, they just, activated some really cool new opcode that allows me to secure my Bitcoin in some novel and interesting way. So I'm gonna send it to this particular address and lock my coins up in this newly activated opcode. Okay, what you've just done there is you've created a bounty on your coins. You have created a bounty that incentivizes malicious miners to change the rules and use the old client.
This podcast episode is an event recording. If you're listening to the audio version, you might be missing some context from the speaker's visuals. You can find the video version at atlbitlab.com. That's atlbitlab.com. There might also be audience questions or other background chatter that's not audible. Look, event recordings are never perfect, but we're sharing it here because we think you're going to find something valuable in it. Let's talk a little bit about our sponsors first, and then we'll get on to the show. This episode is sponsored by ATL BitLab. ATL BitLab is Atlanta's Freedom Tech hackerspace. We have co-working desks, conference rooms, event space, maker tools, and tons of coffee. There is a very active community here in the lab. Every Wednesday night is Bitcoin night here in Atlanta. We also have meetups for cybersecurity, artificial intelligence, decentralized identity, product design, and more. We offer day passes and nomad passes for people who need to use the lab only occasionally, as well as memberships for people who plan to use the lab more regularly, such as myself. One of the best things about having a BitLab membership isn't the amenities, it's the people. Surrounding yourself with a community helps you learn faster and helps you build better. Your creativity becomes amplified when you work in this space. That's what I think, at least. If you're interested in becoming a member or supporting the space, please visit us at atlbitlab.com. That's atlbitlab.com. All right, on to our show.
All right, so we're here to talk about the Bitcoin Consensus Analysis Project. This is part 2, and this is going to be the last part we cover this. We don't want to beat this thing to death. Nitesh covered the first part of this. We were trying to schedule this out in advance, and we couldn't quite work the schedule out to where he could, present both of them in a concise period of time. So I offered to take the second part. So, and I'm happy to do it because it's a very fascinating paper. So this is basically, as it says, analyzing Bitcoin consensus, its risks and protocol upgrades. So what the authors of this paper tried to do is they're trying to analyze how people in Bitcoin reach consensus, both at a social level and at a technical level, to make changes and upgrades to Bitcoin. And there's a lot of, discussion. Somebody was just mentioning me before this that there's apparently a lot of more soft fork chatter going around on Bitcoin Twitter today or something. So, this is something that keeps coming up again and again, but I think this is one of the first attempts I've seen to really break down not just the how does it work at the code layer, but how does it actually work at the social layer. So I'm going to do a brief recap of what Nitesh covered last time in the first half. And I highlighted some stuff. One thing that he spoke to us about was soft forks and hard forks. And the basic idea with soft forks and hard forks is this is, when you are making a change to Bitcoin's code base, a soft fork is kind of like a backwards compatible change, and a hard fork is a not backwards compatible change. So a soft fork is, it tightens the rules typically. It might make the rules tighter or more restrictive. It's not going to loosen the rules though. So yeah, the idea is a hard fork is always going to result in a chain split. Typically, it's going to result in this situation where Bitcoin nodes that fail to upgrade their software will not be able to participate in that same blockchain, so they'll have to have their own split of the blockchain. Soft forks don't necessarily have to result in a chain split, but in certain situations that could happen. we'll dig into chain splits a little bit more as we get deeper into tonight's. Nitesh also walked us through some activation mechanisms. The earliest one was flag day. It was like, at this date or at this block height, the change will take effect. That kind of worked when, Bitcoin was like 10 nodes on the network or whatever. But then we started introducing this idea of like miner signaling and stuff like that, like BIP9. So it's this idea that a miner can actually signal that they're ready for a hard fork by putting, some metadata in their block header and all of that. And then we get into this idea of user-activated soft forks, which is this idea that we call them the users, the people actually running Bitcoin nodes, not necessarily the people doing miners. They could actually, run a Bitcoin node that activates a soft fork. They could run a modified Bitcoin client or an updated Bitcoin core that basically accepts blocks that have this new change. So, is there a question back there that I see?
We see the questions again. I was just wondering, like, there's like a lot of soft forks in the early days of Bitcoin development, right? Like sometimes they say that Satoshi released a version, wouldn't even say what it fixed.
Yeah, were there a lot of soft forks in the early days of Bitcoin's development? That's something I'm actually yes, Bitcoin did change a lot. Like Satoshi in the early days was able to kind of unilaterally make changes because there was hardly anybody on the network, right? And so Satoshi was able to make a quick change, get on Bitcoin Talk or whatever, say, hey, I fixed this or whatever, and it would work. I'm not actually sure if those qualified as soft forks, or maybe some of those might have been hard forks. I'm actually not sure on that. My thought is some of those might have been hard forks, but I'm open to being corrected on that because I'm not entirely sure. Cool, I'll move on. The other kind of things that Nitesh covered last time was state of mind. This is like, I'm going to try and blow this up. Can everybody like see this text okay? Is that good? Okay. State of mind is kind of like they abbreviate SOM. You can, I think some real engineering minds worked on this paper. So SOM1, passionate advocate for a change. SOM2, supportive of a change. SOM3, apathetic or undecided. 4 is unaware. 5 is not supportive, but not to a degree to spend time, money, resources toward fighting it. And then 6 is passionately against a change and willing to expend resources and exercise power to fight it. So as we'll get more into tonight's stuff, it's like you have this idea that like 1 and 2 are kind of like pushing in the direction of supporting a change. 5 and 6 are pushing against that change. And like 3 and 4 are kind of in the middle. You're either unaware or you're apathetic. So 1 and 2 are for, 5 and 6 are against, 3 and 4 are in the middle, neutral. Question?
Just to clarify, when you're talking about the state of mind, that's really more relevant to like BIP32 and BIP9 changes, correct?
It's relevant. It's describing the actual people, and it would be relevant to BIP. It would be relevant to the BIP. Was it 34? Was that it?
I thought it was 39.
39. I'm sorry, because I get them all confused because they're all freaking numbers. 34. Yes, it would be relevant to the BIP34 changes that like where a miner actually, or I'm sorry, I meant to say BIP9. I guess it would be relevant to both of them. BIP34 is block versioning and BIP9 is miner signaling. So yes, the state of mind would be relevant there because the person operating the mining equipment does have to determine, am I for this? Am I against this? Am I apathetic? And it would also be relevant for user-activated soft forks as well because the person who needs to choose whether to upgrade or not upgrade their Bitcoin node has to choose, am I for it? Am I against it? It's relevant for all of them. It's basically for any person, it's relevant. Yeah.
That's a good question. So I remember back in the day, there used to be a way to basically signal in your node. You could do a user agent comment and just put basically a message to the other node operators in there, signaling for or against different things. I mean, you could put it whatever you want.
Interesting.
Is that still a thing as far as trying to gauge consensus from the miner's perspective about the user agent comment?
I'm actually not familiar with the user agent comment one.
Really?
Yeah, I'm not sure.
Old school. This is going back a long, long time.
Yeah, interesting.
But yeah,
Huh.
I think it's called user agent comment, and it's just basically an option in the configuration file where you can add that and then add a note. So.
And it'd be like a plain English note, basically?
Yeah,
Oh,
pretty much.
very interesting. I'm not aware of that.
Okay.
Another question, Victor?
Just to add real quick to that, what Nitesh explained last time though is they primarily look at who's accepting the updates to understand the popularity of it for miners, right? Is that accurate?
Look at, yeah, who's accepting it, yeah. But, well, it'll get a little bit it'll get a little complicated as we get into it tonight. The other kind of, I guess, final point to cover after state of mind, just to recap from what Nitesh said, was these different stakeholders. Economic nodes, these are, to put it simply, because I don't want to get too bogged down by the details here, think of these as companies like exchanges that facilitate the transfer between Bitcoin and other currencies. Investors, so that's basically anybody who invests in Bitcoin. So if you have a cold storage wallet with Bitcoin under your self-custody, you're an investor. If you are someone who is holding Bitcoin on an exchange, well, yeah, it's not the same thing as self-custody, but you're still an investor. Or if you're someone who is like managing an ETF of Bitcoin, again, some people feel certain ways about this, but under at least in their paper, they classify all of those as different types of investors, and they do differentiate between those different types of investors in the paper. Obviously, self-custody investors are a little bit more nimble; they can act a lot more quickly than, say, someone who's managing an ETF. But they're all kind of in this bucket of the investor stakeholder. Then you've got media influencers. So just think of these like podcasters like the Stefan Liveras, Natalie Brunels, Peter McCormack's of the world. You've got your miners, obviously people, whether you're running a single mining rig or whether you're operating like a pool or whatever, it's kind of like, that's the idea. It's miners can signal for certain changes. They can direct their hash power in certain places. Then you've got your protocol developers. These are your people working directly on the protocol itself. That typically means people writing code for the piece of software known as Bitcoin Core. It could also be other things like alternative implementations like BTCD and hypothetical future Bitcoin clients that don't even exist yet. But protocol developers are working directly with the Bitcoin protocol itself. So just think of those as Bitcoin core devs. And then you have users and application developers. That's our final stakeholder category. And that might sound a little bit weird here because there might be, you might think of yourself as like, well, I'm just a pleb. I don't know a lot about code. I just like to hodl my Bitcoin. And then you have someone like Chad who's like made a cool sats.gg lightning, streaming app, and he's entering a top builder. And you're like, well, there's a difference between me as a pleb and Chad as an application developer. Well, actually, according to this paper, you're actually in the same category. And you're both the same stakeholder. And the reason behind that is even application developers, even if you write the most complicated web application in the world that interacts with Lightning and does all this cool stuff, from the Bitcoin protocol level, you are a user of that protocol. So it's like, if you're just a pleb with a Lightning, like a Bitcoin wallet, and your Bitcoin wallet is talking to a Bitcoin node. Chad has built a cool web application, but at the end of the day, it's talking to a Bitcoin node. Bitcoin nodes are the only actual true participants in the Bitcoin protocol. So whether you're just an average Joe user or whether you're an application developer, according to the way they've structured this, y'all are just users. Application devs are just a fancier way of saying a user, a Bitcoin user. So all in the same bucket. Okay, I'm going to get us into tonight's actual content. So that was kind of the high level recap of what Nitesh talked about last time. So now we're going to get into, now that we've kind of set the groundwork, state of mind, stakeholders, hard forks, soft forks, activation mechanisms, how is consensus achieved? And so as they say, I didn't prepare a formal slide deck because I felt like the paper did such a good job of laying it out in plain English that I didn't feel the need to repeat it. So they say, Bitcoin consensus change is not achieved through formal governance, but through a complex interplay of actions and reactions among stakeholders, each with their own unique powers and incentives. They say this process is iterative. So one stakeholder group will do something, and then the other stakeholders are kind of waiting to see what they do. And then another stakeholder group will come in and do something, and then another stakeholder group will react to that. So it's this kind of back and forth process. And so SegWit was well, that was kind of a contentious change in Bitcoin's history. That was around the time of the Bitcoin Cash fork, for those who may not be familiar with the technical word SegWit. But they describe it like this. So protocol devs implemented the SegWit code, merged it into Bitcoin Core. They advocated for its benefits. They also wrote about the risk of ASIC boost, a method to increase the efficiency and profitability of mining that would be incompatible with SegWit. They disclosed bugs and errors in alternative clients such as Bitcoin Unlimited. They played a crucial role in the technical discussions and public communications that shaped the broader community's understanding of the upgrade. And then we get into miners. So miners initially showed low support for SegWit, but as the market demonstrated weak demand for competing proposals like Bitcoin Unlimited and SegWit 2x, so miners faced pressure to signal for SegWit. 84% of the hash power in 2017 supported the New York agreement, but it didn't gain enough traction. Then you get into the economic nodes. What were they doing? Well, exchanges like Bitfinex listed futures markets for Bitcoin Unlimited and SegWit 2x. You might remember that for those of us who joined us for the Block Size Wars book. This allowed for price discovery that highlighted the economic viability or lack thereof of these forks. So by creating a futures markets for these potential forks, they allow this price discovery. That's a power that only the economic nodes have. They also decided how to list these forks, overwhelmingly opting to list them under separate symbols. So they didn't call these forks Bitcoin or BTC, they called them something else. And then the economic nodes supported the New York agreement, but then they get faced with this grassroots backlash, and so they wind down. You have investors. Investors express their preferences by trading futures contracts for different forks. The sell-off of futures for SegWit and BU, that indicates a market preference. The market preference is kind of like saying, don't change the consensus rules. And when you have that many investors selling off the futures, that puts pressure on the other stakeholders groups. This is a quick little market showing the futures markets. Then you got the users. So the users, they advocated for it on social media, on forums, other places. Then there's also this discussion of user-activated soft forks. This idea that what if we have a UASF client and the users can decide to activate SegWit themselves without needing to get the miners involved or wait for miner signaling. And I think what they talk about a little bit in the paper here is there's not really a lot of evidence that the UASF itself played a crucial role in SegWit, but it was kind of like perhaps one of these almost like a negotiating tactic. It's like, hey, we have the UASF, we can do this. Ultimately, SegWit was activated by other means, but because the UASF there was kind of thrown out there, it's kind of like a negotiating tactic. And then the influencers, they advocated, for and against SegWit. It depended on the podcast you were listening to, right? These people end up, shaping the how people feel about these things. And, they say here that the influencers and media outlets played a role in helping to reject the New York agreement. So that's just kind of like how all these stakeholders, exercise their powers in alignment with their various incentives. Yeah, question.
It seems like, does Bitcoin Cash still have a lot of value, and why is that the case still?
I don't think it has a lot of value. I don't know what the price is off the top of my head. It's certainly not 100K.
It's down 1% over 5 years.
Down 1% over 5 years. Yeah, I don't know why it has a lot of value or why people see it as, some people see it as having value. I mean, I'm choosing my words carefully because I think it's worthless. I think, I imagine it's got to be kind of weird if you did go all in on Bitcoin Cash after that fork, and just like if you sold your Bitcoin and turned it into Bitcoin Cash, there's, maybe you have this like hope that it's eventually going to go back up one day, and there might be people holding on in that regard. I mean, again, I just don't know how that market has enough liquidity for that. I think there's also just a good bit of brand confusion too, personally, and this is just my opinion, I don't really know, but I think there's a situation where people get into Bitcoin for the first time, so they Google search Bitcoin, and it's like, hey, Bitcoin.com, and they have Bitcoin and Bitcoin Cash, and it makes them seem like equal things, kind of. So, yeah, I don't know. I don't know why it has, but it's certainly, compared to the Bitcoin's market cap and valuation, is nothing at this point. Yeah.
Going back to the financial, the exchanges, you said that they literally created futures options on the various branches
Yeah.
to try to gauge
Mhm.
price discovery and desirability, I guess. So it sounds kind of like that for me sounds kind of like predicted or like one of these other types of like social like outcome gambling sites that we see now. There's a lot more prevalent.
Oh, like a prediction market.
Yeah.
Yeah. So, I mean, I think that's a good point. Yes, I do personally think I think starting a futures market for something does feel somewhat similar to a prediction market. I think it serves a similar, well, maybe on a financial level, it's not exactly the same thing. It does serve a very similar social purpose. Yeah, exactly. You're gauging the opinion of people with skin in the game. That's a great point. So here's kind of like talking about SegWit activation. It's a lot of the stuff we just were looking at there, but it's put in more visual form. So it goes to these key dates from February 28th, 2015, all the way through November 8th, 2017. And it shows the different stakeholders here, and it shows when they use a power. And so this is what I mentioned earlier, lightning paper published. This is users and app devs according to the authors of this paper. That's actually, somebody working on a Lightning protocol or a Lightning implementation is actually a user of the Bitcoin network. So they're exercising a power by saying, hey, what if, we did this like kind of layer 2 thing instead? Then you have miners and economic nodes, trying to do this Bitcoin XT client thing. You have some protocol devs involved with that too, because I can't remember the names, but some protocol dev must have been involved in that. You get Hong Kong Roundtable, Bitcoin Classic. Miners are involved in this discussion here. Bitcoin Unlimited. You got the miners. You got exchanges. You have people talking about it on podcasts and stuff. You got the New York agreement. This has got you got miners, economic nodes, investors, users. This was kind of like an agreement that took place before the consensus conference in 2017. It was kind of a secret industry meeting where like a bunch of people from all these different companies got together to try and discuss a Bitcoin fork, basically. I think that was one of the things that was really, there was no protocol developers that I'm aware of involved in the New York agreement, which is part of what made the New York agreement a little bit controversial, is that it was kind of like, again, this is always a debate that, like a philosophical debate. There are some people who are like, oh, well, the, Bitcoin protocol developers are like an elite few who get to dictate what happens with this. And, but then the counter argument to that is like, well, no, the Bitcoin protocol developers are the people who put in the proof of work to demonstrate they actually know how this technology works, and their opinions matter, right? So, but yes, this was kind of, I see it as kind of a revolt against the protocol devs. Yeah.
So this is all well before my time, so I really don't know a lot about the conversations that happened. My understanding is that you basically had a bunch of big economic actors, like some miners and some big exchanges, who thought that the best thing for Bitcoin and for their businesses would be to increase the block size, which was a hard fork.
Mm-hmm.
And they lost. My question is, had they pursued a soft fork and they recognized that hard forks were no good, like absolutely no case you can do it, but they were saying, some other conversations coming right now around like OpCat or like CTV. Do you think that the lesson would be the same, and the result would be the same?
It's a good question. So if they had tried to pursue, if the miners and other economic node actors had tried to pursue a soft fork instead of a hard fork, would the lesson be the same?
Without protocol developer consent, like the big core contributor consent. They were against it, but they went with it anyway. They moved to OpCat, for example.
That would be interesting. I think the lesson might be the same still, because the thing about it is that a soft fork could still result in a chain split either way. So I think that like hard forks are definitely contentious in Bitcoin, but soft forks are contentious as well. Like hard forks are almost kind of like, I feel like they're kind of like, it's kind of like the Overton window is shifted to where they're not even discussed anymore. Whereas with soft forks, you can still, like, soft forks are like in the Overton window, I feel like, but they're still like considered risky and dangerous, right?
The risk would be, I guess, from the perspective of the user, that they use the soft fork and there isn't actually a majority of hash power behind it, and their funds end up getting stolen to
Yeah.
a reorg.
Yeah.
So I guess the risk in that regard is not that you have like two versions of Bitcoin, but rather just the user loses their money.
Yeah.
And so I just find it interesting because like there's this lesson I feel that was learned, and it's just well before my time. I don't really know what happened, but it seems like we almost maybe swung in a direction which is maybe too strong the other way, which is there is no role for economic actors in this process. It's purely an open source thing led by the core developers. When you could make an argument, had it gone differently, maybe the lesson would be that there is checks and balances, but anyone can contribute to core, anyone can fork it. And
Sure. Yeah. Question.
Maybe to rephrase Joshua's question, is it possible for large economic actors to like force a change in, even with protocol developers not wanting it? So
Yeah.
because I think we could add like ETF and in now even potentially sovereign wealth fund kind of actors into that second column here that might create more momentum for a potential change that may be counter
Sure.
to what developers would be wanting.
I think let's just keep going because I think it'll all become clear as we keep going. I think what the authors of this paper are actually saying is that like it already does happen that way. Like already, what they're trying to say here is economic nodes already do exert influence. Media influencers do exert influence. Users do exert influence. All these groups do exert influence. And so that's actually the point of this process, is that all of these stakeholders do have power and they do have influence. But it's the way, the areas in which they can wield them are limited. So I think that these are valid questions and great points. And I think that, I think someone who's smart enough to work on Bitcoin core protocol design, I don't want to put words in anybody's mouth, but I think it's kind of like, I think that that the discussion around the protocol, you kind of have to be able to carry your weight, like intellectually, to be able to have really, really serious, meaningful conversations about the protocol. And it might be, yeah, I mean, it's kind of like you have to put in the proof of work to show you can have a discussion about the protocol. But having said that, economic nodes, all these stakeholders, they all have power. And so that's kind of like what this whole paper is talking about. Let's move on, because that's basically what we're talking about, is like, everyone's smart and thinking ahead here. This is basically what this paper is about. So let's look at this, stakeholder powers during a consensus change. This next section of the paper is talking about how stakeholders have varying degrees of power during the course of a consensus change. And so this graph here, I think, lays it out pretty well. You have different, like the amount of power you have in a given stakeholder class, they say, changes over the course of a consensus change. And so I'm not sure if everybody can see the colors super well. Actually, I think because I have night mode on this monitor, I can actually see it, the colors better over here. So we got blue line for economic nodes, red line for investors, or I'm sorry, that's a orange line for investors, green for media influencers, red for miners, that is a purple for protocol developers, and a black for users. The purple and the black kind of blend together, but we'll roll with it. So let's say you're going to make it, you want to, some kind of new feature or some kind of change to the protocol. We'll start at the beginning. We'll roughly say this is protocol ideation. So at this point, investors have the least amount of power. Miners have a little bit of power. Then they say that, what is it? The green, the media influencers have a lot of power, and the protocol devs have a lot of power, and the users are kind of in the middle. And so the idea here is that at the protocol stage, this is where the protocol devs are at their most powerful, because this is during the protocol ideation. They're coming up with ideas, whether it's being discussed in GitHub threads, mailing list posts, chat rooms, conferences, wherever it is, this is where the ideas are flowing freely, and a lot of powerful conversations happening. And maybe code's being written, but it's all experimental kind of stuff, right? It's not like actual deployable code. Then at this time, it's a little counterintuitive seeming at first, but the media influencers, they say, actually have a lot of power at this time, because this is the point in time when no one is running this code in production, right? It's just ideas that developers are talking about and maybe experimenting with on their own laptops. So of course, podcasters invite them on to talk about their stuff. You've probably watched episodes of like Stefan Livera or Peter McCormack where they're interviewing some developer and they're talking about some, this opcode's going to fix everything, right? That's kind of what that is at this time, the media influencers actually have the ability to take ideas that are being discussed on mailing lists and at conferences and really, really elevate these ideas and raise awareness in people's minds. They also have the ability to bury these ideas or to not talk about them or to talk shit about these ideas, right? These are all on the table, but that's the power that the media influencers have. So they're like the most powerful ones here. Then you get into the idea of the bit being implemented. Implemented is, that's where they're writing code for it, they're testing it, all of this kind of stuff. And then you get over here where it says merged into core, signaling threshold starts. So in this example scenario, we're going to, let's say it's SegWit or Taproot or something like that. We're going to actually merge the code into Bitcoin Core. And there's going to be a minor signaling mechanism in place, by whatever means. And it happens. Okay, so at this point, look, the protocol devs and the media influencers, actually, their power starts to decline. It doesn't go all the way down, but it goes down the middle. At this point, this is where the miners start to gain more power. Because I just said, we're talking about a minor signaling mechanism. So as soon as it's merged into core and that code can be downloaded, that Bitcoin version can be downloaded and the miners can start running it, their power goes way up. They can actually start signaling or not signaling. It depends on how they want to wield their power. Also, the investors, go up during this time, that they say. I want to double check that in a minute. I think that was just because the idea that if there's the possibility of a contentious fork, investors can kind of signal what they want to do. The economic nodes are starting to gain power at this point as well too. And so this is where you start getting into the ideas of like, futures markets and things like that. And when the signaling threshold, hits and, it's actually, the consensus change is actually going to happen because the miners have hit that signaling threshold. The economic nodes are at their most powerful. So at this point in time, from the signaling all the way through it actually hitting, they can do things like launch futures markets. Like, okay, what if there is a chain split or a new coin? Well, we can start a futures market for that. Or investors could be like, oh man, I don't like these changes to Bitcoin. I'm going to sell my Bitcoin and buy some shitcoin instead. Like they could do that. And again, whether you think Bitcoin price action is affected by this sort of thing or not, I don't know. That's up for discussion. But it's like the investors have all these ways of signaling their preferences based on which exchanges they use, whether they buy their Bitcoin or sell it, whether they sell off futures on other coins, things like that. Then you have this like thing where like the majority of clients start to adopt it. So again, the power shifts a little bit. Again, the miners, they still have the ability to kind of choose. They don't have the signaling power. They can, however, choose if they want to keep mining under the new consensus changes or if they want to switch back to the old ones. The protocol devs, their power starts to go down. It doesn't plummet all the way because the protocol devs and the media influencers, they can start to shape public discourse. Like certainly if someone is a very experienced protocol dev, their opinion might carry a little bit more weight. hopefully carries a lot more weight if they know what they're talking about. You know, the media influencers, you know, still have big fan followings and all that. But yeah, the users are kind of in the middle here. They never really get to the upper echelons of power here. But you know, what's kind of interesting though is that the investors get you know, the most amount of power at the top. And I'd say a lot of us, you know, a lot of people fall into the category both users and investors. This is where investors have a ton of power because, again, if there is a chain split or something like that, in the case of like Bitcoin and Bitcoin Cash, well, you can sell your Bitcoin Cash for Bitcoin. So you're creating like if you sell your Bitcoin Cash, you know, you're hurting the price of Bitcoin Cash, and then you're also creating more like demand pressure on the Bitcoin side of things. So you know, the investors end up wielding, you know, a ton of power there. And at this point, I think they show the economic node power going down. It's because once you know, the majority of clients have adopted it, it's really in the hands of the investors at that point for the market to kind of decide if it likes this change or not. So yeah, they all have powers. It kind of depends. That's what the authors of the paper are saying. Any questions, thoughts about all of that kind of stuff?
I guess just a thought I had about you know, the economic nodes and the investors, right? So I mean, I guess that's more of a reason for people to hold their own keys, right? Because they can vote with their money being Bitcoin,
Yeah.
what they believe to be Bitcoin, right? So I mean, just looking at it, you know, when you think investors nowadays, people think the ETF, right? But almost all of them, except for one, doesn't even prove they have the keys.
Yeah.
They just say that they do. They don't prove it.
Yeah, and they do argue earlier in the paper that yes, if you do have self-custody, it enables you as an investor to move quicker, right? I think ultimately it matters how much Bitcoin you have, because like the more Bitcoin you have, the more kind of like, if you think of it as a vote, it's kind of like the more Bitcoin you have, the more votes you have. You know, if I don't like something and I sell half a Bitcoin Cash, that's not as much of a profound statement as if somebody sells 10 Bitcoin Cash for Bitcoin. But certainly, if I have self-custody, I can move quicker. And so with enough people with self-custody, yeah, you have the ability to move quicker as an investor. Yeah.
Because I mean, there's what, 19.85 million already mined.
Yeah.
And there's supposedly only a couple million on the exchanges, right?
Yeah.
So while they may be looked at as the economic nodes today, the reality is those who hold the keys are the real economic actors in the protocol. Right?
Yeah.
So I think that's just kind of a chart to advocate for self-custody, in my opinion.
Yeah.
So
Did I? Oh, sorry, go
I
ahead.
don't know if this fits into what we were just talking about, but was it IBIT that changed their thing such that they can allow for in-kind redemption? There was a recent change to one of the ETFs.
What do you mean when you say in-kind
So in-kind
redemption?
Everything that was approved last year had, if you had like a bunch of it, then there's an option, and there's limits, and you have to be a certain type of investor and stuff. But there was an option you could sell for cash. Well, it's just like selling it, right? But for a lot of these ETFs, they have what they call in-kind redemption. So if it's like a gold ETF, then you can take your ETF shares and convert them to gold, and they will have to give you the gold. One of the ETFs, I think it was IBIT, recently changed such that if you're a big holder of that ETF, you could actually say, give me the Bitcoin that represents this block of ETF share, and there would have to be a mechanism which basically they would have to transfer a certain amount from their holdings into your possession, again, certain qualifications and stuff. But it kind of, instead of a trust me bro sort of model that the ETFs are under, it's like I could kind of make a run on the ETF like you would make a run on the bank if enough of the major investors wanted to pull out actual Bitcoin. They could show that the ETF actually had it. It's kind of like looking, is the gold in the Knox kind of like thing.
Yeah, that's
so
cool.
My question in this context is like, does that mean that their economic power is potentially elevated if you can move the market, or if you can pull like I guess it really equates to the amount of Bitcoin. It equates to the voting power. So in that case, it's kind of slightly elevated based on the nature of that ETF. That's thoughts.
Yeah, I'm not sure. I mean, maybe just by having a lot of Bitcoin. Yeah, I don't know. So
I guess the question that comes is like, could a big hedge fund like BlackRock like do something in the market that substantively changes any of this consensus? Could they somehow exert power in a way that is inordinate? Like,
if they're an investor in Bitcoin, they can do it according to this paper. Again, that's the thing, is that the investors have power. I'm going to move us on here because we got some more shit to get through. One point I just want to highlight here: the fact that the relative powers of the stakeholders fluctuate throughout the consensus change process suggests that stakeholders should have a counter-cyclical behavior with respect to their state of mind. That was maybe I don't know, very engineer-y way of putting it, but the plain English way of saying it is like, you don't, like, when you need to exercise your power, when the time comes when you are, as a stakeholder, you are at your most powerful, you don't want to be stuck in the middle at 3 or 4. You don't want to be unaware or apathetic of a change when you're the most powerful. So obviously, as a protocol dev, you don't want to be apathetic at the beginning of this process. Similarly, as an economic node, you don't want to be apathetic or unaware going into this critical part of the change. You want to follow this and know what it is, so that when the time comes where your stakeholder group is the most powerful, you're prepared to act. So yeah, I mean, again, this section here is just talking about consensus in Bitcoin. How do you measure it? How do you actually figure out where everybody's at? That's kind of, I think, maybe what you might be getting to there with your comment, is that how do you actually, before you start implementing it, determine how people feel? And it's messy. This is the social layer of Bitcoin. It's not, there's not an easy way of doing it. When it comes to exchanges, economic nodes, you can see their press releases and stuff like that. You can't really see what client version they're running, but you can see their press release. You can look at their product development announcements. With investors, you can see how they're feeling by the price of Bitcoin. You can see how competing forks of Bitcoin are doing. You can see press releases from like major investment firms and ETFs and things like that. See what their views are. See how they're investing their money. Engagement and views. That's kind of like how you see the media influencers take on it. What topics are they choosing to promote and engage with? Of course, as they say, it's sometimes difficult. Particularly like with like Twitter API. If you really want to scale the Twitter API, or if you want to peruse the Twitter API at scale, I think you got to pay a decent chunk of change. But assuming you have the money to pay, you could, in theory, survey social media for social sentiment. Minor signaling, obviously, that's the version bits and the metadata on the blocks. You can see press releases from major pools. Of course, a miner could lie. They could actually, do a version bit signal without actually updating to a particular client version. So there's not always a way of knowing. With protocol devs, this is obviously the largest one. They can write and implement about, they can write about stuff, they can implement code, they can advocate for proposals, do press releases, social media posts, talk at conferences, write code, write tests. Bitcoin Inquisition, it's like a SIGNet for testing new opcodes. You can see what people are merging into Inquisition, what people are actually using on Bitcoin Inquisition. But again, as I say, developers' influence is often indirect. It just kind of depends on if their proposals get accepted or rejected, and it's also subject. A proposal might be a very strictly defined piece of code within the mind of the protocol engineer, but it's kind of going to be interpreted by the community in the way that people want to interpret it, and it's not always. Maybe it's accurate, maybe it's not, but it's going to be interpreted in a different way. And then users and application devs, Again, press releases, product developments, all that. Again, application devs and users are in the same bucket. But again, it's hard. They also say, you can actually measure how people feel about stuff by the absence of press releases or the absence of, commentary online. If you see a company or an individual not talking about something, maybe that's a signal that they're not into it, or maybe they are into it and their company is working on something with this new consensus change and they can't talk about because it's considered a trade secret. So they suggest that maybe as a stakeholder, whatever kind of stakeholder you are, if you see another stakeholder who's kind of being silent on an issue, maybe you want to kind of talk to them, have a one-on-one chat, just kind of, gauge the temperature, how they feel about a certain proposal. That way you can figure out what state of mind they're in and all of that. But measuring actual social layer human consensus is messy, and it's not something that we can do accurately. They do suggest some ideas for how we maybe could improve this process. If we had more transparency from economic nodes, that's basically like exchanges telling you what version of Bitcoin Core they're running and publishing it very publicly and openly. You could have prediction markets for Bitcoin protocol changes. So you got Polymarket. It's super fascinating. It's a altcoin protocol sort of thing. So I don't love that, but the product itself is fascinating because you can see people bidding on all kinds of stuff, like from who's going to win the election to who's going to win the Super Bowl to is this celebrity going to say this word in the next 12 months on TV? Maybe you could make some kind of Bitcoin-based prediction market for certain protocol changes. Prediction markets with enough scale and enough market liquidity seem to do a good job of predicting things. But that's maybe dinner conversation. Maybe there's an implementation of an anonymous cryptographic attestation mechanism. So it could allow stakeholders like a large Bitcoin holder or a frequent transactor to sign a message saying they agree with a change without revealing their identity. That's a little kind of hand wavy and woo woo to me. That's some real moon math, cryptographic black magic. I'm not entirely sure how that would work, but I mean, if you just kind of squint at the idea, it sounds kind of cool. And then aggregation websites that summarize support or lack of support for different protocols. So for anyone that's been following my user experience work over the couple of years, I've launched websites like bitcoinqr.dev, and I've helped with the bolt12.org redesign and also wintaproot.org. These are simple websites that show which company and wallet supports Taproot addresses, which company and wallet supports Bolt12, which supports BIP21, QR codes with Lightning parameters embedded. These are simple application layer things. What if you took that idea, but you scaled it to something much bigger, industry-wide, and made it for protocol changes instead of for the little dinky application layer stuff I do? We're gonna get into some interesting, weird territory here, and I kind of don't want to take questions on that previous one because I want to make sure we get into the really crazy, weird chain split stuff that I think everyone will find fascinating. Now, when I was reading this, I was initially a little bit conflicted with the order in which they laid out the information in this paper, and I thought about rearranging it for everybody and putting chain splits at the beginning, but then after getting through it, I realized I don't really know the best way to organize this content. It's Bitcoin. It's a lot to wrap your head around. So at this part of the paper, they start talking about how okay, most of the consensus changes, or really all of them so far, have been in Bitcoin Core. In the future, maybe that's not the case. Maybe people start making Bitcoin written in other programming languages. And it was, and maybe these new Bitcoin clients actually gain adoption, or maybe people actually want to run these clients. So they call these alternative consensus clients. And they highlighted it's a major departure. It could involve risks, but it is an option. So there could be different, motivations for that sort of thing. Economic nodes, maybe they has something to do with more trading or more fees. With the media influencers, maybe it's, just a chance to be in the spotlight, potential to gain attention and credibility, be seen as promoting innovation, all of this kind of stuff. Maybe miners want to get more transaction fees out of the whole deal. Maybe protocol devs want to add new features, all this kind of stuff. But if you get to a point to where we can't do that in Bitcoin Core, then people, could start pursuing these alternative consensus clients. So they lay out this kind of nice little flow chart here. It's like your upgrade paths for Bitcoin are, right now, we're here. You get your upgrade merged into Bitcoin Core, and it basically is going to happen probably like historical network upgrades like SegWit and Taproot. It could instead be upgrade, could be merged into an alternative client. And if it doesn't reach minor hash rate threshold, then the alternative client fails to activate the upgrade, and people probably stop using it. It could be that it actually reaches a minor hash rate threshold. And if there is low or medium economic node adoption, meaning if exchanges, the economic node actors, fail to adopt the alternative consensus client, or they don't, not enough of them do, then you're going to have a chain split, which we're going to get to. If a high economic node adoption happens, then you could have a world with alternative consensus clients, and maybe that's the future. But what could happen, though, is that other path, that chain split risk. So what is a chain split? So a chain split's the scenario where the blockchain forks into two chains, and you basically have two coins. And this has happened, a couple times in like Bitcoin and blockchain history. I want to say I might be wrong in this, but I want to say it happened in the very, very early days of Bitcoin when there was like hardly anybody working on it. This must be like 2010 or something, 2011. And the protocol devs very quickly like hashed it out and got it fixed, right? So there was a chain split in the early days in Bitcoin, I believe. It happened in Ethereum, I think, in like 2021 due to a bug between two different implementations of Ethereum. It also happened, with us with Bitcoin and Bitcoin Cash. We ended up with two different coins. So there was Ethereum, the chain split in 2016 after the DAO hack. Basically these hackers stole a bunch of money from a smart contract. I'm kind of paraphrasing, and some people in the Ethereum community want to roll that back and take the money back from the attackers, give it back to the rightful owners, and some people didn't, and so it forked into Ethereum and Ethereum Classic. Some people did not upgrade to the Ethereum client that rolled back those transactions, and so you ended up with a chain split. So whenever there's a significant disagreement like this over protocol consensus rules, this is going to create a chain split. Yeah.
Quick note on the recent $1.5 billion Ethereum heist that occurred. I don't think there's any rolling it back, but there was discussion.
Ooh.
It seemed about doing a rollback.
Oh boy.
Implications might be. I think now we've gone way too far to like even consider it, but it seemed like a window of time when the Ethereum community was considering rolling it back, which would have probably tanked their whole project, in my opinion. But
wow.
That's like these things do happen, and these issues come up.
Yeah, that's wild times, and that would have been crazy if there had been another split. But for anyone who's not kind of aware, has never been in Bitcoin for a chain split, for those of us who are here during the Bitcoin Cash fork, you end up with money on both chains. That's the weird thing about it, and that's the kind of hard thing to think about. But it's because the blockchain has diverged. It's like you have this ledger with all these pages in the ledger that you're stacking up, and then suddenly it forks, and it's like both chains are the same up until a point, but then it forks off over here and over here, and they then have different histories after that point in time. This is, it's like imagine, I don't know, imagine the time travel movie where someone, fails to, goes back in time and prevents their friend from getting killed, and then you end up with two timelines, one where their friend is alive and one where their friend is dead. Same basic idea. Conceptually, scientifically, science fiction, metaphorically speaking, you end up with coins on both chains. So this is where the economic nodes, come into play. It's this like market warfare of like, which coin do people want to hold? Are you apathetic? Are you in the middle? Are you state of mind 3 and 4? And you're just going to hold on to coins on both chains and see what happens? Are you for the chain and you're going to sell the original chain and hold on to the split? Or are you against the change and you're going to, sell the old and buy the new? Like, what are you going to do? The economic nodes, so investors have a role to play in that, and the economic nodes have a role to play in that because they can assign ticker symbols and they can, choose which kinds of markets they want to honor and all that kind of stuff. So you also have the idea of hash rate allocation. So miners have a role to play during a chain split. Miners can decide which chain that they want to direct their hash power at. And if a bunch of miners move to one chain, the other chain could be 51% attacked. Like right now, we talk about, what if Bitcoin could be 51% attacked? What if all the largest pools are one player? Well, imagine if all the hash power in Bitcoin, or like a whole bunch of it, suddenly started mining something else. Well, then you could probably have a 51% attack. You also have this idea of replay attacks, which is an interesting one. You might remember this from the block size wars. Replay attacks are basically like, let's say I have a transaction on Bitcoin and I broadcast a transaction to send somebody some Bitcoin, but somewhere along the way, this Bitcoin transaction I broadcasted makes its way over to a Bitcoin Cash node, and my Bitcoin Cash accidentally gets spent as well, or vice versa, right? So you have this situation where you only intended to spend your coins on one chain, but it accidentally got spent on both chains. So these are replay attacks, and I believe there were replay attack mechanisms, like prevention mechanisms, put in place before SegWit was activated, but I might need to be corrected on that. So the long-term viability, it's like the success of each change depends on its ability to garner sufficient economic activity. You need people using the chain for economic activity. You need developer support. You need miner participation. There's also like this debate kind of that can happen in a chain split, like which one is the real Bitcoin? And I think at this point, we all feel like, hey, Bitcoin's the real Bitcoin. It's the one called BTC. It's Bitcoin Core, right? And but this is like an ideological difference. If you're on the other side of that, maybe you think the other one's, Bitcoin. So yeah, chain splits are a pretty, pretty scary situation. Oh yeah, this is what I really wanted to get into, is like all these things right here. Okay, so there's this idea that after a consensus change comes into effect, like let's say the miners signal for it and the consensus change updates, miners could still change their tune, right? So like, let's say you have these blue blocks, which are the newly proposed rules. These are like, call these the soft fork blocks. These are like the blocks that have some new Bitcoin feature that was just activated. So this consensus change is activated. We're mining blue blocks that contain all of our new rules. And then somebody broadcasts a legacy transaction that's like, not viable under the new tightened rule set. But they broadcast it, but it has a ton of fees associated with it. It's like, yeah, you're a miner and you see this transaction come in and it's like, okay, these aren't the new rules, these are the old rules, but there's a ton of fees here. I kind of want to include these transactions in a block, even though it's the old rules and not the new rules. Call to bribe, Andrew says. Yeah, that's exactly what can happen. So in this scenario right here, the pool mines it. So you have a new rule block, and then miners start, mining these legacy rule blocks. They get into this idea of a bounty. So the idea is, let's say a consensus change has just been confirmed and like, the last block or whatever, and as users, we're all gung-ho, and it's like, yeah, they just, activated some like really cool new opcode that like allows me to secure my Bitcoin in some novel and interesting way. So I'm gonna send it to like, this particular address, and lock my coins up in this newly activated opcode. Okay, what you've just done there is you've created a bounty on your coins. You have created a bounty that incentivizes malicious miners to change the rules and use the old client. Because let's say I'm like, yeah, say I'm like super rich and I've got like 10 Bitcoin or something. I'm like, I love this new opcode. I'm gonna lock up 10 Bitcoin with this new opcode. Well, now I've just created a 10 Bitcoin incentive for the miners to change the rules on me. So, I newly proposed rules transaction. I put my Bitcoin in this new opcode. It gets mined in a block. I put another, one in there. It gets mined in a block. Something is weird about the font color on this. I don't know why it's like showing up so light, but it says newly proposed rules block bounty 200 Bitcoin. I've sent 200 Bitcoin to an address locked up in a novel new opcode that was just activated. So then somebody sees this and they're like, well, under the old rule set, if I use an older Bitcoin client, it doesn't recognize the newly tightened rule you're using. So I could actually spend that transaction, and then a pool sees it, a mining pool sees it, and they mine it. This creates a chain split. And so there's one block over here that still has my Bitcoin in it. It still has my 200 Bitcoin in it. And then in the legacy rules fork, miners are mining blocks that have basically stolen my Bitcoin. So there's a chain split there. And, it's an interesting thing. Then it's like, well, which chain wins? And obviously my Bitcoin is on, I want the blue chain to win because it has my 200 Bitcoin locked up in this novel new opcode. But what if the orange chain wins? Sorry.
Only one miner is going to get that 200 Bitcoin, right? So why would all the other miners?
Well, think about it like this. So what if instead of just thinking about it as me locking up my, say, 200 Bitcoin in this new opcode, let's say a lot of people do it. So let's say all around the world, a bunch of people start locking up their Bitcoin in this new opcode. So a bunch of people create transactions spending the coins from the new opcode, and they pay a huge transaction fee to the miners because you're stealing somebody's Bitcoin, right? So it's like if it's 100 Bitcoin, as a miner, I could just pay you 10 Bitcoin and you'd probably be good with it, right? Like that would probably be enough for you. And let's say I broadcasted a ton of these transactions. A lot of miners would probably want to scoop up that money, right? So, but it just depends on how much. If there's enough of these bounty transactions being claimed, maybe enough evil miners start mining these blocks to where, to gain the transaction fees to where they don't want to roll it back.
So it's almost like a bounty has to reach like a critical mass to incentivize miners to cause a chain split.
I think that's a good way of putting it. That would be the way I would imagine it, is that the bounty would need to hit a critical mass to incentivize enough miners to want to split, yeah.
So the inference here is do not use a new feature for some period of time after it starts.
I think that is a correct inference, to not use a new feature for a little bit of time. Like maybe if a new consensus change comes into effect, maybe don't send out of an abundance of caution, perhaps don't send your coins to any kind of address or script that utilizes some novel new feature until the network is kind of stabilized and we're certain that there's not a chain split and all of that. So I think that's about it. That we've kind of beaten the bounty thing to death, and I think I'm going to go ahead and just bring us to a conclusion here. Yeah, that's probably it. There's a lot of stuff we could talk about here. I think this might be a good place to just kind of wrap it up right here. So this is kind of the final questions that the authors put forth. It's not super long list. I'm not going to like read every line in this. I'm just going to cover the key bullet points. So assessing whether a proposed change has achieved consensus can be challenging due to Bitcoin's decentralized nature. Consensus is not formalized through votes, but it's instead gauged by the absence of strong, sustained opposition and the overall sentiment of the community. So you can look to several indicators and resources. So I say, 1, mailing list discussions. 2, GitHub activity. 3, the BIP process. We talk about those a lot at BitDevs, people writing these documents with suggested improvements. Technical conferences, workshops, podcasts, minor signaling, node adoption, economic node statements. In other words, press releases from exchanges, tweets from exchanges, things like that. Community sentiment. This is a little squishier and soft, but how do people talk about it at your local BitDevs meetup? How do people talk about it on Twitter? Just this kind of, what's the vibe when talking about something? Technical analysis and reviews, like looking for people that have really reviewed the code for new changes. What do they say about it? Have people run this on testnet and signet? And if so, are people using it on testnet and signet? And is it working? Is it working as expected? Are there bugs? That sort of stuff. Market sentiment, derivatives, futures, the price of Bitcoin itself, and then user activation. This is the extreme case of people actually using UASF clients. So these are all things that whatever kind of stakeholder you are, and I think a lot of us in the room, we probably fall into multiple stakeholder categories here. And only you can know which of those categories you fall into. But we all, I think, belong to a different subsets of different stakeholder categories. That according to all those papers, that's from what they've analyzed, that's how this process works. So now you know your powers, you know when you're the most powerful. Your role is to go out into the world now and be involved in these discussions and figure out how to best exercise your power so that you get the Bitcoin that you want. So that's it. That's the night's conversation.
Hey, thanks for listening. I hope you enjoyed this episode. If you want to learn more about anything that we discussed, you can look for links in the show notes. That should be in your podcast player, or you can go to atlbitlab.com/podcast. On a final note, if you found this information useful and you want to help support us, you can always send us a tip in Bitcoin. Your support really helps it so that we can keep bringing you content like this. All right, catch you later.